We have Thomas Harr, head of Asian Forex strategy at Standard Chartered Bank, joining us from Singapore this morning. Thomas, what about that high-flying Japanese currency? You know, we have trading in options at the end of last week, actually suggesting that there's a 71% chance that the yen will rake in another record high beyond 79 to the US dollar. Your thoughts on the currency?
Yeah, I think it's clearly as that was talked about before. I mean, the problem is that US is going to do more printing of money, more quantitative easing, and that implies that relative interest rate continue to move in disfavor of the dollar, and that continue to put downward pressure on dollar yen. I also think the signals we have got from Japan in terms of currency intervention has been a bit mixed after they intervened in the middle of September. So the bias is clearly for dollar yen to continue to grind lower, and I think intervention is the only thing which can from time to time put a floor under that, but the trend remains for dollar yen to grind lower.
Okay, so at what point is the Japanese government going to step in here and intervene again? I mean, they did it at 82 to the US dollar the last time around, and right now you're looking at the yen pretty close to 81, breaking 81 at this point. So your bets on when Noda and Khan will step in?
I think 80 is probably the next level the market will focus on, but of course they need to think not only about dollar yen, but of course the trade-weighted yen. I think, of course, dollar yen is the most important cross for them, so probably somewhere around 80. And of course also dependent on where the dollar is against other major currencies, for example, like the euro.
Okay, well, you know, we have Nomura recently, Thomas, raising his estimate on the yen to 85 against the dollar for this fiscal year and down to 81 in the next 2 years, down from 88. Do you think we'll see this continued strength in the currency, in the yen, last for the next couple of years or so?
No, I don't think so. I mean, eventually Fed will, clearly the risk is now for more easing, but clearly the Fed, in our view, will tighten at some point over the next 2 to 3 years ahead of Bank of Japan. And ahead of that event, we should see dollar yen start to break higher, because that is, in our view, the key driver for dollar yen these days.
Okay, well, let's talk about some news from the U.S. side, Thomas, before I go any further, because what about dollar weakness right now? That seems to be driving currencies all around the world. In fact, the Australian dollar broke through parity. What's the best bet with the dollar weakness? Some are saying the Aussie dollar and the CAD, the Canadian, might be the high flyers.
I think in general you actually have better opportunities in emerging Asian currencies like the Korean won, like the Indian rupee, Philippine peso. They will continue to perform well, given that Asia is seen as a key growth region in the world. And of course, China is starting to move more on its currency. It was actually very important what happened on Friday, where US actually pushed back, delayed the currency manipulator report, which I think is crucial, because this would allow China to continue to allow this gradual appreciation, which we have seen over the last 1 or 2 months.
Okay, what about that Treasury report? I thought most of the market was expecting it to be delayed anyway, so it wasn't that much of a surprise on the markets, was it, Thomas?
Yeah, there was very mixed signals. Some was expecting it to come, and then in the end it was delayed. I think the key thing, this is a signal to China clearly, that if you continue what you have done over the last 1 to 2 months, that may be enough. Of course, there's still this lingering concern of a bill being approved in the US between the midterm election and Christmas. But clearly it's a positive signal compared to China.
All right. Thomas, nice talking to you. Thank you for that. Thomas Harr, Standard Chartered.